8th straight month of sales declines.
Prices are down 10+% since June.
Sellers are starting to get the message, but they're definitely resisting.
The 30-year fixed mortgage rate hit 7%.
There was a house recently on Zillow that was listed for around $500,000 that sold for $405,000. Now, I know I was looking at one specific property in one specific area, but I think it is indicative of what's happening around the country with home prices. Maybe they priced it too high, maybe they knew it was going to sell around that price, but I think it still represents what's happening in today's market. Today, we are going to discuss what exactly is a buyer's market, why I think we are in a buyer's market, and different things that you can do as a buyer, as an investor, in order to take advantage of this opportunity. Make sure you all subscribe to this channel for some awesome content around real estate, personal finance, and the economy as a whole. For the past few years, you've been hearing on different news channels that we are in a seller's market. The seller did this, the seller did that, the seller sold for over this. But now we are starting to have some reports by some economists saying that we are in a buyer's market or that we're heading into a buyer's market. But what exactly is a buyer's market? But before we talk about a buyer's market, I want to quickly talk about what happened over the past few years with a seller's market. So what is a seller's market? According to Forbes, a seller's market is when people who want to sell their homes have more negotiating power than prospective buyers. There are fewer homes for sale than buyers. As a result, median home price for pre-owned homes are higher. And that's what we saw over the past 2 years. We saw people having less negotiating power in buying a house. They couldn't get it for the price that it was listing for. They had to go over asking, or they had to give a cash offer. You had people waiving contingency fees, contingencies in general, like inspections and repair. And overall, inventory was low. So you can imagine in a buyer's market, it's the opposite of that. Forbes states that a buyer's market exists when people who want to buy homes have more negotiating power than people selling homes. There are more homes for sale than potential buyers, leading to lower home prices. Now that we established what a buyer's market is, I'm going to talk about why I believe right now fits that definition and why we are in a buyer's market. The first indicator to a buyer's market that I want to discuss is home prices falling or people selling their homes lower than their original listing price. Take a look at this chart by Redfin on the number of listings that have had price drops. The red line represents the year 2022, and in the month of October, around 7.9% of listings have had price drops. Compare that to last year in 2021, which is represented by the blue line. That number was around 3.5% of listings that had price drops. Now that's over 2 times the amount of price drops. And this chart is only looking on a week by week basis. But if you take the whole month, for example, in the month of September, around 25% of homes had price drops. Take a look at this chart from the Dallas market showing the increase in price reduction, increase in median days on market active listings, and median list price slowly creeping down, all indicators of a buyer's market. Not only homeowners are dropping their prices, but home builders, the people who actually build houses that contribute to inventory, they are slashing their prices also. On top of that, a lot of home builders are just sitting at the moment, waiting until this whole craziness with interest rates rising up stays steady. On top of cutting prices, a lot of homeowners are offering concessions in order for buyers to buy their house. According to a real estate agent in Homey, Colorado, he states that sellers are offering more incentives, such as contributing to buyers' closing costs, and are willing to take more contingencies than in the past. So now we are definitely in a market where buyers do not have to waive contingencies, and investors and buyers can actually make an offer around listing price. Going back to this chart in the DFW area, you can see that the days on market and active listings have both increased. Inventory plays a big role to knowing which state of the market the real estate industry is in. So if we have more inventory, more houses that are being listed, that in turn lowers home prices and also increase the number of days that a property sits on the market. All of these indications pointing to a buyer's market is predicated mostly on the Fed hiking the Fed rate. We are hovering around a 7% interest rate in a 30-year fixed mortgage. A lot of mortgage companies have been dropping their clients because they're not able to qualify for different houses around their areas only because of the interest rate, where before, even if the home was a higher price, but since the interest rate were lower, they were able to qualify for a property. But now, even if a price of a house is reduced by, let's say, around 5%, since the interest rate is so much higher now, it actually is more expensive for a potential client than it was before when home prices were a little bit higher. And I think sellers now just have a more realistic view on what their house is worth and what they can sell their house for. I've been looking for houses around my area. I bought a rental in May at a decent price. I made sure I got the price I wanted. Around the interest rate was around 6% actually, but that's for an investment loan. But right now I've been looking at primary housing for myself, and I noticed some of them dropped significantly, but they're still not at the price that I'm able to afford it, where it makes sense for me to buy. Right, so I talked about why I believe we are in a buyer's market, but what can we do as buyers or investors in order to take advantage of this buying opportunity? Now, I know home prices are still relatively high, but that doesn't mean that you can't still make an offer lower than listing price on a lot of these homes. And so the first thing I would suggest that you as a buyer can do in today's market is make offers lower than listing price. Homeowners are coming into reality that the market has shifted. They're seeing their homes around them selling lower than their listing price or just sitting on the market, and they're ready to accept an offer lower than their imaginable list price. Now, the real estate industry is still a competitive market, and so you still have to make an offer that is a competitive offer where your seller could actually consider it, right? You don't want to go too low where your seller or the seller just completely ignores you, but you don't want to go too high where it's completely out of budget. Make sure you make a fair offer, because if you're looking at a house, most likely other people are looking at that house also. I think finally, for right now, we are done with waiving contingencies. So that's the next thing. Make sure you have your contingencies in place. Make sure you don't waive inspections, and you ask the seller to make repairs where needed. If the seller cannot do any repairs or don't know how to do repairs, of course, you can ask them for cash for those repairs or a credit on the final listing price. On top of that, you can ask the seller to pay all closing costs and also for them to be flexible on the closing date. Now, investors, it is definitely our time to shine. Whether you're new or experienced, I think this is one of the best buying opportunities, because we don't know how this whole market is going to turn out. Because yes, we do have higher interest rates and we do see prices dropping a little bit, but it's not to the point where it's pre-pandemic levels where we can actually get a deal. So if you're flipping houses, educate your sellers on, hey, here's the market, here's the financing, this is the price of your home that I can pay. And then when you go sell this home, this newly flipped home, you got to be realistic with the price. Sell or price to sell the house. Don't try to price it where it's over market and you think you're going to get these high offers. Be realistic with your goals. Let me know down below what you all think. I think right now the Fed hasn't addressed the affordability issue, because yes, they hiked interest rates and there's a higher number of homes on market, right? There's higher inventory levels, but the prices haven't quite reflected that so much. The median home price is still at all-time highs. And so right now we have high interest rates and high prices. And so how can someone, an average Joe, afford a house right now when everything is high? Last year around this time, as I talked about earlier in this video, you could have bought a higher price home because interest rates were so low. That drops that buyer out of the buying pool because of interest rates. So inflation is still rampant. Are we in like this hyperinflation where interest rates, financing is high, and on top of that, commodities, assets are all high? Let me know down below what you think is the best solution to this issue? Or do you think it just takes a while for home prices to really truly affect the impact of what the Fed is doing in hiking interest rates? All right, make sure you all subscribe, comment down below, and I'll talk to you all later.